Everyone knows that the United States government cannot possibly repay and is just incapable of making the decisions necessary to repay all the loans that have been given the United States government. The United States government's debt, $31 trillion, well, it just isn't going to be repaid. And so now DBRS and Fitch, two of the credit rating agencies that score the U.S. government on how likely it is to not pay back its loans, have taken into review the U.S. credit rating right now. So, and that's with a negative outlook, as they say. So what's happening is they are considering downgrading, and they're giving everyone a warning. We might downgrade the U.S. credit worthiness. So if the credit score of the United States, which is near perfect, gets dinged, the risk premium or the interest rate that we're going to be getting for all those loans, the $31 trillion that the U.S. federal government owes, it's going to have to be a lot higher interest before people are going to be willing to loan that money to the U.S. government. That's going to cost billions, if not trillions, over the long haul for the U.S. government. Considering the U.S. government's just going to keep on spending more money than it takes in for the foreseeable future until some crisis happens, and then the United States government will spend way more than it takes in, and that's just where we are. And so the credit rating agencies they're kind of chasing the ball going down the hill, because in the fair market right now, we have the treasury bills that are out there that are being traded back and forth. Well, they're trading like a third world country right now. So the short-term treasury bills, people are afraid that the United States government's going to default. The market is predicting that there will be a default. And they're pricing the U.S. treasury bills like they will be in default, that you may not get your money back. And so this is a big concern. Now, we're going to be talking about not just this default, but we're going to talk about the implications of that, which is going to be the value of the dollar is going to drop significantly. And when we start looking at currency evaluations and such, a 10% drop in the value of the dollar is not unthinkable. When we look over at the euro, when we look at the pound, we look at other countries' currencies, major current world currencies, they have dropped significantly in just a matter of months. That has happened. And the European Union has lost control of their euro. The British pound, they lost control of that. I mean, the Canadian dollar has been falling against the US dollar and against other world currencies pretty significantly. So what would a 10% move in the value of the US dollar really mean for average Americans? People that go to Walmart, people that, maybe don't admit going to Walmart, but, go to Walmart because you get your cheap stuff there. We also often call Walmart China Mart, right? Because so much of the stuff in the store is now from China. It's from other countries. The United States imports about 15% of our groceries, 15% of our food. But that's not exactly the truth, though, because that's 15% of the value of our food. So when you start looking at the gross tonnage of food that's brought in the U.S., it's actually a lot higher. The U.S. brings in low-costing food and then sells in the U.S. A lot of the food that you purchase and buy, if you're not like some hoity-toity person, a lot of it comes from overseas. If you want to get an avocado, it's probably coming from Mexico. And if you're a millennial and you want some avocado toast, that's just the way it is. About 11% of the U.S. spending, consumer spending, comes from imported goods. What that means is that of the dollar value, once again, of things imported. But we have cars that are made in the United States, right? But then we have all this cheap plastic stuff, cheap silverware, plastic tubs, all this stuff's made overseas in other countries, right? So it's really skewed. And additionally, we have to remember that the door swings both ways in a free market economy. Not only are the things that are coming in right now cheap and the cost of those will go up, but the cost of everything inside the United States will go up too. Because when the dollar drops by 10%, basically everything in the United States goes on fire sale to everybody else in the world. Everyone else in the world, everything in the United States just became 10% cheaper. And so they're going to reach in and they're going to start buying stuff out of the US. Unless the value of those things goes up against the dollar, so a 10% increase of goods across the board. If we have a 10% hit, we're such an international economy that unless your wages go up 10%, you're probably going to take about 10% hit on everything. Now, that's not technically inflation, but it'll effectively look like inflation. And when this thing starts going, as the US dollar starts cratering, more and more countries are going to start dumping US dollars. And as the US dollar starts tanking and as the credit worthiness of the United States starts dropping, look at the mortgage-backed securities back in 2008. They kept saying, oh, they're perfect. There's nothing wrong with them. They're absolutely just like nothing in the world could possibly shake these. A week later, they're like, oh, by the way, they're junk. They went from like way up here. If you've ever seen the movie The Big Short, you just saw how the banking rating agencies, they all just get handouts. They get paid to give these high rankings. And so they just kept giving up the high rankings until the very last minute. Once the market tanked the value of these mortgage-backed securities and other things, they were selling for pennies on the $1,000. And still they were sitting there with great credit ratings. These rating agencies, when they start smelling smoke, you know that the game is already over. Friends, on the market already, they are trading the savings bonds, the U.S. Treasuries, whatever you want to call them. All the money that people have loaned the federal government, people who have done that are starting to rethink whether they should really be doing that. And other people who are supposed to be stepping into the market and investing their money into loaning to the federal government are kind of like not sure they want to do that. And so the people that have all these treasury bills, they're kind of stuck. They're stuck holding something that they don't necessarily want to have, which is why they're trying to unload it to people that don't want it, and they're having to do it for a bargain price. Everything in the United States is about to go on fire sale to the rest of the world. If your money is in dollars, if you get paid in dollars, if your stocks and bonds and your retirement funds and everything like that are in dollars, friends, you could be in a world of hurt really quick. That's why we keep saying, get into physical goods. Get food. Just recently, I just put in another order for some more solar panels. I've been buying like 100-watt solar panels here and there as they've gotten cheap. Like on Amazon, I got a deal for like 60, I forget, it was like $63, $64 per 100-watt solar panel. Good deal. Hey, there's some great Memorial Day sales right now on food. There's great Memorial Day sales on all sorts of stuff out there. You might want to check it out. If you have some money that's in dollars, buy stuff for tomorrow that you're going to need, or emergency supplies. Buy things that are going to be assets, and don't get bit as the US dollar drops in value, because the price on everything is about to go sky high. And this is something we're going to be seeing in a very short period of time. People in Argentina who last year, everything cost half what it costs today. 1 year. And Argentina is not that different than the United States. Yeah. United States is a world reserve currency. Everybody trusts and has full faith and credit in the US dollar. Yeah, sure they do. Until they don't. When that piece of paper is really just backed up by everybody thinking that it's going to keep going up forever, what happens when it starts going down? You'll see that it will drop like a rock. People will unload it so fast, it'll leave your head spinning. The United States has never been in this position before where we have a paper-backed currency as we go into a credit crisis. When we see these other countries that have just paper go into a tailspin, we see these countries implode like nothing else. The only thing that's propped up places like the UK, Canada, and Europe, a lot of these places have been propped up by the US dollar. The International Monetary Fund, basically the United States just loaning money. What happens when the United States is not there to back up other people? Other countries are going to collapse as well. Their currencies, the whole world's going to go down together, except for the countries that have backed their currencies with something real, something legitimate, or who have significant exports of something that everybody needs. But hey, when the world's economy is crashing, will they really need as much oil? The answer is no. When the economy's crashing, they don't need quite as much oil. They don't need quite as much of everything, basically. So, what do we see going forward? Friends, we're seeing massive inflation on the horizon. And if you're living in the United States, if you get paid in US dollars, we see trouble ahead. And this debt default may be the pin that starts popping that bubble. And like every bubble, like every balloon, when you pop it, the pin goes in, and then there's that breaking moment. There's that moment where it snaps, and it just goes kablooey. And 2008, we saw the market just go straight down vertically. A market crash. Same thing could happen with the US dollar. When it starts dropping hard, there isn't going to be anyone jumping in to try to bail it out. People are just going to start selling. And as they sell, more selling. That's basically how a crash works, is that people panic and everybody starts unloading. What happens when everyone starts unloading the dollar? It's going to make stock markets seem tame, because the implications for the world economy and for the U.S. as a whole. And as history unfolds and as history goes forward, I bet you we're going to see, looking back, we're going to see China and Russia and a number of other countries up on the top of the cliff having given us the push that we couldn't see. Friends, why do they need to go to war with us if they can just fiscally implode our entire economy? If they can do to us what we did to communist Russia, the Soviet Union. You watch the Soviet Union look so strong, and then just days later, the whole thing just collapsed. Similar thing could happen to the United States as well. All right, folks. If you found this video to be useful, helpful, you might want to check out another video from me right over here. I'll see you over there, or I'll see you later. Steve Poplar of the Poplar Report, out.